In these videos, we will look at IAS 20, accounting for government grants and disclosure of government assistance. We will also be looking at SIC 10, which has its own specific rules, which you guys will have to study. Then the standard is a very important resource for you guys to use in order to understand this topic. We have an economic event. You received money from the government in order to do something for them. And this standard gives us guidance on how do we account for this grant that we have received from the government. And also how do we disclose these events. This is a layout for you guys of the standard. We will be looking at the scope. We will see what is included and what is excluded from IAS 20. The definitions are very important for you guys to study. Please do study it hard, and it's very important for theory as well. The recognition criteria as to when and how do we account for this grant. Then paragraph 12, systematic basis. This is a very important principle in this standard. Okay, something you have to understand by the end of all these videos. We will be looking at it in the other videos. Then presentation, and then we have two types of government grants, which is asset-based grants and income-based grants. This is just our lecture plan and our plan for all the videos to follow. We have the background as to why are we doing this, why do we have government grants. Then we will be looking at the scope, as we said, what is included and excluded from IAS 20. Then the definitions, which is what we are accounting for. Then as well SIC 10, which has its own specific rules, like we said, which we will look at later. The recognition criteria from when and how. The presentation. And then we'll be looking at government assistance. Just a heads up, there's a difference between government assistance and government grants. Okay, and then lastly, we will be looking at disclosure. So here we will be looking at the background for government grants. Why would the government pay this grant to the entity? Very important, the government always has this specific goal in mind. They will grant the assistance, but there are always conditions attached to it. For example, they will pay you money, but they want you to train your employees with that money. So these goals can include job creation or industry-specific development. All you guys have to understand is that you receive this money from the government in order to achieve a specific goal for the government. Here are just a few examples for you guys. It's for IAS 20 government grants, fish farming, manufacturing, textiles, and BBBEE. Then very important, as we've said, the government always has a bigger picture in mind with the grant. Okay, government assistance. So the government grants this grant to certain entities. So it's only granted to certain entities to encourage them to take a course of action that they would not normally take. So this grant is given to encourage you to do something more. For instance, to train your employees. Very important, like we've said, there's a difference between government assistance and government grants. You will see it clearer in the videos to follow, but just a heads up. So why is this significant? Okay, and what is the accounting implications for us? Resources, for example, money has been transferred and it needs to be accounted for. So we have this economic event. The entity receives money from the government. However, they have to send their workers for training. Okay, so the entity would want to see how much they benefited from this assistance. So they've received money from the grant and they've paid money for the training, and they wish to see what is the benefit for them. So what do you guys need to know? You guys need to have a basic knowledge of this standard. You need to know the theory as well as the application. And then very importantly, the basic accounting and disclosure of IAS 20. So what is the scope of IAS 20? We've already said this is where we look at what is included and what is excluded from IAS 20. So we're looking at the accounting and the disclosure of grants. Okay, so the definition of a government grant is very important. And like I've said, there's a difference between the grants and the government assistance. Okay, then we'll be looking at the disclosure of the assistance. Okay, and it does not deal with the following. These things you just have to study. The first three are very important. You guys don't do IAS 41, so the first three you really have to know off by heart. So tax benefits are excluded from IAS 20, therefore it's not a government grant. Okay, and it's not assistance either. So this tax benefit is, for example, you get a deduction for tax in your tax calculation. Okay, so if it's a benefit in terms of the tax you have to pay, so now you pay fewer tax, that is not government assistance or a government grant. Government participation and ownership is also excluded from IAS 20, and then special problems with price changing and supplementary information is also excluded from IAS 20.